I've got kids, and that means it's always about them. But I need support too. That's where Ollie comes in. With their delightful, hardworking gummies, my partner and I can actually get a good night's sleep, so we'll both stand a chance of managing our stress responses. Even when the kids are doing parkour in the living room. Discover Ollie vitamins and supplements. These statements have not been evaluated by the Food and Drug Administration. This product is not intended to diagnose, treat, cure, or prevent any disease.
This episode is brought to you by JLL. Get an insider view into the world of commercial real estate with JLL's podcast, Trends and Insights, the Future of Commercial Real Estate. Whether you're curious about making cities more sustainable, the evolution of office space, or AI opportunities, this podcast will help keep you a step ahead. Tune in for candid conversations with business leaders about the biggest trends impacting how we live, work, and play. Subscribe to Trends and Insights now at jll.com/podcast.
Silicon Valley Bank, SVB, was once the darling of the tech industry, providing loans, banking services, and venture capital to thousands of startups and entrepreneurs. But in 2024, the bank collapsed under the weight of its own debt, fraud, and mismanagement, leaving behind a trail of lawsuits, investigations, and angry customers. How did SVB go from being a trusted partner of innovation to a bankrupt institution? What were the warning signs that investors, regulators, and customers missed or ignored? And what lessons can we learn from this debacle to prevent similar disasters in the future? In this episode, we will examine the rise and fall of SVB, the factors that contributed to its demise, and the implications for the tech ecosystem and the broader economy. SVB was founded in 1983 by a group of former bankers who saw an opportunity to serve the emerging tech sector in Silicon Valley. They offered flexible and customized financing options to startups that traditional banks deemed too risky or unprofitable. They also developed close relationships with venture capitalists, angel investors, and accelerators, acting as a bridge between the tech community and the financial world. SVB quickly gained a reputation as the go-to bank for tech entrepreneurs, attracting clients such as Airbnb, Stripe, Uber, and Zoom. By 2020, SVB had over $75 billion in assets, $64 billion in loans, and $29 billion in deposits. It also had a global presence, with offices in Europe, Asia, and Latin America. SVB's success was driven by its ability to adapt to the changing needs and trends of the tech industry. It offered specialized products and services, such as equity financing, convertible debt, growing capital, mergers and acquisitions advisory, and innovation banking. It also invested in emerging sectors such as biotech, fintech, blockchain, and artificial intelligence. SVB's strategy was to take calculated risks on promising startups and entrepreneurs, hoping to reap the rewards when they went public or got acquired. It also leveraged its network of connections and expertise to provide value-added services and advice to its clients. SVB's motto was, "We don't just bank innovators, we're innovators." However, behind the scenes, SVB was facing serious challenges that threatened its stability and reputation. This included overexposure to risky loans. SVB's loan portfolio was heavily concentrated in tech startups that had bad burn rates, negative cash flows, and uncertain profitability. Many of these loans were backed by equity or warrants that gave SVB a stake in the companies. While this strategy could pay off handsomely if the company succeeded, It also exposed SVB to significant losses if they failed or underperformed. Moreover, many of these loans were subject to covenant waivers and modifications that reduced SVB's ability to monitor or enforce repayment terms. Another reason was fraud and corruption. SVB was involved in several scandals that tarnished its image and credibility. For instance, in 2022, SVB was fined $250 million by the Federal Reserve for violating anti-money laundering laws and failing to report suspicious transactions involving foreign clients. In 2023, SVB was sued by the Securities and Exchange Commission for allegedly inflating the valuations of some of its portfolio companies to boost its own earnings and stock price. In 2024, SVB was accused of colluding with some of its venture capital partners to rig the bidding process for some of its loan clients. These issues came to head in 2023 when SVB faced a liquidity crisis that triggered a run on its deposits and a default on its debt obligations. The bank's troubles were exacerbated by a downturn in the tech sector, which reduced the demand and value of its loans and investments. The bank's creditors and regulators lost confidence in its solvency and viability and refused to provide any lifeline or bailout. On 17 March 2023, SVB filed for Chapter 11 bankruptcy protection, marking one of the largest bank failures in US history. SVB's collapse had far-reaching consequences for the tech industry and the broader economy. Some of these were disruption of funding and banking services. SVB's bankruptcy left thousands of startups and entrepreneurs without access to vital funding and banking services. Many of them had to scramble to find alternative sources of capital or face insolvency. Some of them had to deal with the loss of their equity or assets that were pledged to SVB. Some of them also faced legal disputes or investigations related to their dealings with SVB. Another reason is loss of trust and confidence. SVB's bankruptcy eroded the trust and confidence of investors, regulators, and customers in the tech sector. It raised questions about the viability and valuation of many tech companies, especially those that relied on SVB's financing and endorsement. It also exposed the vulnerabilities and risks of the tech ecosystem, which has fraud, corruption, and overvaluation. It also damaged the reputation and credibility of the tech community, which had prided itself on being innovative, ethical, and socially responsible. Regulatory backlash and reform. SVB's bankruptcy triggered a regulatory backlash and reform in the tech sector. It prompted regulators to tighten their oversight and enforcement of tech companies, especially those that operated in sensitive and regulated areas, such as finance, health, or security. It also prompted regulators to revise their rules and standards for tech companies, especially those that involved lending, investing, or valuation. It also prompted regulators to collaborate more closely with each other and with international counterparts to prevent or address cross-border issues. SVB's collapse was a cautionary tale for the tech industry and the broader economy. It showed that innovation and growth must be balanced with prudence and responsibility. It showed that risk-taking and experimentation must be accompanied by accountability and transparency. It showed that success and reputation must be earned and maintained with integrity and excellence. Some of the lessons that we can learn from SVB's collapse are: diversify and diversify. Tech companies should diversify their sources of funding and banking services and avoid relying too much on one provider or partner. They should also diversify their products and markets and avoid being too dependent on one sector or trend. They should also diversify their teams and perspectives and avoid being too homogeneous or insular. Tech companies also should monitor their financial performance and health and avoid being too leveraged or unprofitable. They should also monitor their compliance and ethics and avoid being too lax or shady. They should also monitor their environment and risks and avoid being too complacent or reckless. Innovate and improve. Tech companies should innovate their offerings and processes and avoid being too stagnant or obsolete. They should also improve their quality and value and avoid being too mediocre or overpriced. They should also improve their impact and purpose and avoid being too harmful or irrelevant. SVB's collapse was a tragic event that shook the tech industry and the broader economy, but it was also an opportunity to learn from its mistakes and to build a better future for innovation.